What is going on, my friends? Ryan Williams here, back with another one, and boy, oh boy, do we have some delicious dividend stock discounts to discuss today. That's right, my friends. In this video, we are going to be running through 5 different dividend stocks that have suffered from some pretty poor share price performance, and we'll see whether or not they offer a good bang for your buck when it comes to increasing your cash flow. So that's what we have coming up first, and then later on in this video, we'll get into a little Q&A where I'll answer some of your questions like where you should invest $10,000 right now, and why it's beneficial to hold certain dividend-paying assets like a real estate investment trust and a tax-advantaged account. Anyway, before we get rocking and rolling, if you guys are excited to talk about some awesome dividend stocks today, go ahead and give this video a big thumbs up. Also, leave me a comment below and let me know which cheap dividend stocks do you currently have your eye on. I'd be very curious to know. Anyway, thank you so much for doing that. And now, without further ado, let's get into it. All right, guys, now getting right into it, the first stock we are going to be talking about today is VF Corporation, ticker symbol VFC. And for those of you who are not familiar with this company, they own pretty iconic brands like Vans, the North Face. I think they might own Dickies, Supreme, and some other ones as well. So they are a big retailing company. Anyway, as you can see from the chart here, this company has just been plummeting in share price. In the last year, they're down about 19.5%. And the last 6 months, they're down almost 22%. And then just in the last 30 days, guys, they are down 13.63%. So all across the board, this company is seeing a pretty substantial drop in share price. And most recently, guys, this is going to be due to some news coming out about their earnings. As you can see on the screen, this blurb right here reads, VF Corporation fell in early trading after the company dropped its full year revenue outlook to $11.85 billion versus a prior view for $12 billion and the consensus estimate of $11.95 billion. But this is actually a great thing for us dividend investors because we love to buy these great, solid companies at a discount if we can get them, and just based on the share price, guys, VFC is certainly that. It is certainly at a discount. Now, in regards to this company's dividends, we're going to go over to the dividend scorecard page and scroll down. As you can see, VFC has a forward dividend yield of 3.14%, a payout ratio that is more on the high side, 68.64%, and they have a 5-year growth rate, which is actually not too terrible, 6.47%, with a very impressive dividend growth history of 48 consecutive years. I like all of these dividend stats except for the payout ratio. I wish this was a little bit lower, like somewhere under 60. That's kind of the threshold that I tend to look at for a company like this. Now, with all of this said, is VFC a good stock to pick up right now, guys? And I've got to say, it's definitely one worth keeping your eye on. I mean, the valuation's pretty decent. If we expand this key data right here, we can see the PE ratio is sitting right under 20, which is not a bad spot to be. And this company seems to get more and more affordable with each passing month. So right now might not be a bad time to start dollar cost averaging your way into this company. As they approach Dividend King status, they are less than 2 years away from reaching that. And it might not be a bad buy as it continues to decline in share price, which is the only thing it seems to be doing as of late. With that said, guys, definitely don't take my brief analysis on this company at face value. Most definitely dive a little bit deeper and do your own research into VFC as well as the other companies we're going to be talking about today. All right, guys, now moving on to the second stock we are going to be talking about today. That is TROW Price, ticker symbol TROW. And TROW has been a hot topic of conversation in the Discord group lately. And if you are not already in the Dividenders Discord group, then this is an open invitation for you to join. The link to do so is in the description of this video. You just need to click the link. It'll take you right to the group. And for those of you who are not familiar with what this is, essentially it's just a big group chat filled with a ton of different dividend investors. I think we're up to over 380 members now at this point, and it's a great community to be a part of if you're interested in dividend stocks. Basically, within this group, we are sharing our portfolios, getting advice, sharing tips, and also sharing our analyses on a ton of different dividend stocks like TROW Price. So there's a lot of value to be found in this Discord group, and it's a great way to connect with other like-minded investors. Anyway, guys, back to TROW. It is down in the last year, 5.26%. In the last 6 months, it has seen a really steep drop of 29.42%. And then in the last 30 days, it is down nearly 24%. If we go back to the 6 months right here, we can see that probably within the last month, actually within the last month, pretty much exactly, it just really fell off a cliff, really went down in share price. So this stock has been hurting for some time now. And honestly, guys, I can't tell you exactly why this stock is going down so much in share price. The financials, from what I can see, look pretty swell. I didn't do a super deep dive, just kind of scanned through some of the financial statements. But as far as the dividend stats goes, guys, this company has it going on. The forward dividend yield of TROW is 2.92%. They have a very low payout ratio of 33.86% with a very high 5-year dividend growth rate of 14.87%, which is one of my favorite things about this company right here. And they also have a very impressive dividend growth history of 35 consecutive years. And with all of this said, guys, TROW price looks like a pretty good buy to me. I mean, if we scroll down right here, take a look at the PE ratio, that is sitting at 12.13, which is a pretty low PE ratio. And like I said, when I took a look at the financials, I really liked what I saw. I saw some pretty steadily increasing revenue and net income, a steady decrease in shares outstanding, negative debt, and consistent increases in free cash flow over time. With that said though, guys, I personally don't have any TROW in my portfolio at this time, but it is on my watch list. And as far as cheap dividend stocks go, it is sitting very close to the top of my list. All right, guys, moving on to stock number 3, we have AT&T, ticker symbol T, which somehow seems to make its way into a lot of my videos. It's actually one of the biggest positions in my portfolio right now. Definitely like number 2 or 3, I would say, as far as the biggest holdings go. And like TROW, AT&T has been the topic of a lot of great debate, not just in the Discord server, but across dividend investors near and far. Everyone is talking about AT&T, especially lately as we've received some more concrete details about the spinoff with Warner Media. As you can see on the screen, this headline reads, AT&T slashes dividend, says it will spin off Warner Media, is part of Discovery merger, which really shouldn't come as any surprise to anyone. We knew that all that stuff was going to happen, but we now have some more concrete details regarding how many shares we'll be receiving of this new company as AT&T shareholders and what the dividend is going to look like post spinoff. Now, starting with the number of shares, guys, after the deal closes, each AT&T shareholder will receive 0.24 shares of the new Warner Brothers Discovery common stock for each AT&T share that they own. So if you have 100 shares of AT&T, which I'm like right there, you will receive 24 shares of this new company, which is not too shabby. And then moving on, talking about the dividend, guys, AT&T's board of directors said it will have an annual dividend of $1.11 per share following the close of the deal, down from its current level of $2.08 per share, which would give it a 4.3% yield as of yesterday's closing share price of $25.50. Now, with that said, guys, $1.11 per share is really not too bad, especially considering I think after the spinoff, AT&T will not be $25 or $24 per share. I'm really expecting AT&T at most to be $20 per share after the spinoff. If we estimate the share price will be $20 per share, then them paying a dividend of $1.11 would come out to about a 5.5% dividend yield, which is actually not too bad at all, I would say, guys. I would be stoked to still be receiving a 5.5% dividend yield from AT&T. And going back to the screen, guys, we are going to dive a little bit deeper into this company's share price. I mean, in the last year, they're down 13.85%. In the last 6 months, they're down just under 13%. And then in the last 30 days, they're down another 3.42%. And regarding AT&T's current dividend, they're sitting at about an 8.5% yield, I believe, which is extremely high, but that will soon change after the spinoff. Like we saw, it should go down to hopefully above 5%. That's kind of what I'm hoping for. I'm really expecting the share price to drop to around $20 per share, or possibly even a little bit lower than that. At any rate, guys, this begs the question, is AT&T a good dividend stock to buy right now? And honestly, it's tough to say. Now, I personally have been buying AT&T on a pretty consistent basis the last probably month or so now. I'm picking up another couple of shares a week. Now, having said that, I do think that AT&T still has a bumpy road ahead before things settle and the tides hopefully change, knock on wood. It's not going to be for the faint of heart, I'll tell you that. Now, if you're a current AT&T shareholder, that's a little bit of a different story. I think now is a pretty good time to lower your average cost per share and continue dollar cost averaging into this company for the long term and really stock up, especially as we get closer to the spinoff. By buying more shares right now, you'll get more shares of this new media company, which should be pretty awesome. All right, guys, moving on to stock number 4 of the day, we have Stanley Black & Decker, ticker symbol SWK. Now, as you can see, in the last year, SWK is basically flat, but in the last 6 months, it is down almost 12.5%, and then in the last 30 days, it is down another 6%. So this company is making its way down. And despite this decline in share price, it's actually still putting up some really strong numbers. I mean, as you can see on the screen, year over year, Stanley Black & Decker has seen a revenue growth of 24%. And then if you compound that across across the last 10 years, it's growing at a compound annual rate of 5.63%. The net income is growing at a pretty nice level if you look a couple rows down. And then looking at the very bottom at the levered free cash flow, that is also looking to be in a great spot with a year-over-year growth of 5% and then a 10-year compounded annual growth rate of 8.81%. Now getting into SWK's dividend, guys, scrolling down, we can see they have a forward dividend yield of 1.81%, which I think is on the lower end, but they have some other strong metrics that I think make up for that. The first of which is the payout ratio, which is currently sitting at a very low 26.8%, which means they're only paying about a quarter of their free cash flow to the dividend, which is awesome. Hopefully this means that the dividend isn't financially stressing them out and that as the years go on, they'll be able to continue growing and continue paying the dividend to us as shareholders. Now, getting into the 5-year growth rate, this is, somewhat decent, 5.69%. And then they have a dividend growth history of 53 years, which is very impressive, making them a dividend king, which you cannot ever have too many of those in your portfolio. All right, guys, now getting into the last incredibly cheap dividend stock of the day, we have Quest Diagnostics, ticker symbol DGX, which is a company I have not talked about before on this channel, so I'm excited to share it with you all today. In the last year, they've actually not done too bad. They're up almost 7.5%, but in the last 6 months, they are down 6.23%, so they're making their way down, and then in the last 30 days, they have just fallen off a cliff and are down 17.06%. And across the board, guys, I think this company is at a really decent valuation. Now, going over to the valuation page, we'll take a look at a few of those metrics, starting with the forward PE ratio, which is sitting at 15.62, which is not too shabby in itself, but this is also 22.68 lower than the sector median PE ratio, which is awesome to see. And then scrolling down, taking a look at the forward price to book right here, guys, 2.45, which is 23.2% lower than the sector median price to book. And then the forward price to cash flow is in the single digits, right where we like it, sitting at 9.93, which is almost 50% lower than the sector median price to cash flow. So all across the board, the valuation metrics are looking pretty good, and Seeking Alpha gives them an overall valuation grade of a B+, which is not too shabby. Now, as far as this company's dividend, guys, scrolling down, we can see they have a pretty low forward dividend yield of 1.94%. The payout ratio, it doesn't list it here. I'm actually not sure why, but these last two stats are pretty nice. The 5-year growth rate is 8.5%, which I really like. And then they have a pretty respectable dividend growth history of 11 years in the double digits. And I want to actually see how long they've been paying their dividends. Oops, actually go here. So they've been paying their dividends for 17 consecutive years, so just 6 years longer than they've actually been growing. And if we zoom out on this chart right here, that looks like some pretty solid dividend growth. Now, is DGX a good stock to buy right now? I mean, it's down 20% in the last month, okay, single-digit PE ratio, not too shabby price to book, pretty low price to cash flow in the single digits. At this point, though, guys, I really can't speak too confidently about this company's financials. I haven't taken a good look at them. But those aside, I would say that there is a lot to like about DGX. And I would be curious to hear your thoughts about this company in the comments below. All right, my friends, and those were the 5 incredibly cheap dividend stocks I wanted to share with you all today. And now we are going to move on and get into the Q&A segment of this video, starting with our very first question, which comes from Rita Tariq. I hope I pronounced that right. I apologize if I did not. Who says, your videos are really helpful on many points. Thanks so much. However, I have a question. If you were to invest in some stocks today as a long-term investment, which ones would you recommend right now? Which gives a relatively good return without being too uncertain? My budget is around $10,000. And that is a really great question. Basically, if you had $10,000, what would you invest in right now? What do you think are some good long-term investments to put this into? First and foremost, I would say if you're not sure but want to get rocking and rolling right now, maybe start with some ETFs. Maybe put it in some VOO, V-O-O, or maybe put it in some VTI or some SCHD. These are all great, reliable, dividend-paying ETFs that you can invest in right now to expose yourself to a wide batch of stocks. Now, however, if we are talking about some great long-term companies to own, there's a few that come to mind. Not all of these are going to be like at a discount or a fair value right now, by the way. I'm just going to list off some companies that I think are good to hold for the long term. Now, we have Procter & Gamble, which is one of my favorites. McDonald's, you can't go wrong with McDonald's. Walmart, Costco, Home Depot, Lowe's, Apple, Microsoft, the list goes on and on. If you're looking for individual companies, good, reliable individual companies, I would first look at ones like this and then go from there. However, if you're just getting started with dividend investing and don't really know where to begin or where to put this money, I would highly recommend first starting with ETFs, kind of learn the ropes with those, get a basic understanding of how all of this stuff works, and then maybe start picking some individual companies from there. So that's my 2 cents on the matter, and hopefully that helps answer your question, or at least kind of points you in the right direction. Now, moving on to our second question of the day, guys. This one comes from Jack Black, who says, question for you guys. New to investing, and I have $1,500 worth of WPC and Realty Income, ticker symbol O, in my taxable portfolio. I've seen it suggested to only have REITs in a Roth and not in a taxable account. Why is this? Now, I have those same 2 real estate investment trusts in my taxable brokerage account as well. But having said that, it is probably a smarter move to own real estate investment trusts or business development companies in a Roth IRA, because these are tax advantage accounts. And assets like REITs, which are, WP Carey and Realty Income, or BDCs, which would be like a Main Street Capital Corporation, and some other individual companies as well, they pay what are called ordinary dividends. Now, when you get a dividend, you either get an ordinary dividend or you get a qualified dividend. And qualified dividends are going to come from other companies like Procter & Gamble or Coca-Cola. And the difference between these 2 types of dividends is very simple. One is just taxed at a higher rate than the other. Ordinary dividends are going to be taxed at a higher rate than qualified dividends. I think the highest tax rate that you can go for qualified dividends is going to be like 15%. But then with ordinary dividends, you're just taxed at whatever your normal income rate is, depending on how much money you make. So because of this, it is often recommended to hold your real estate investment trusts in a Roth IRA so you don't have to pay taxes at all. Hopefully that answer made sense, and there's probably some other information in there that I probably should have included. If you guys have any more input on the tax side of things when it comes to real estate investment trusts or Roth IRAs that you think would be important for Jack to know, please share them in the comments below. I think that'd be very helpful. And with that said, my friends, that wraps it up for today's video, but I hope you guys enjoyed watching. This one was a lot of fun to film. And before you click on to the next video, if you wouldn't mind doing me a couple quick favors, I'd really appreciate it. First of all, leave a like, leave a thumbs up on this video if you have not done so already. Second of all, if you're not sick of me quite yet and want to see more dividend stock investing content from me, please consider hitting that subscribe button and following me along on my dividend investing journey. At this point, I'm putting out 2 videos every single week on the topic of dividend stocks, and I have a lot of great content coming your way. So I'd love it if you'd stay up to date with me and hit that subscribe button. Now, third, I know I mentioned this earlier in the video, but if you want to join the Dividenders Discord server, the link to do so is in the description of this video. All you need to do is click the link. It'll take you right into the Discord group where you can read the rules right there, and then you just need to click the green thumbs up button, and then it'll open up all of the chat so you can start engaging with other dividend investors. And with that said, I will now get out of your hair, but thank you all once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.